Hey, everybody, this is Amanda. I wanted to let you know that we're having an awesome guest today, John Clark, who is the founder of Momentum Mortgage.
I'm the CEO and president of the. Yeah.
And not only that, he's one of the most creative investors I know and one of the best mortgage lenders that I know for sure, which is why if you're listening to this podcast, you're going to get a lot of knowledge about how real estate can help you today because as many of you who are watching my channel know, the reason that I got into this business, well, first of all, I got into this business as an investor as an accident. But the reason I kept going was so that I could empower myself financially, empower others financially. And that is all that John Clark is about, empowering people financially. And so we're going to be discussing today about how real estate has been able to do that historically, what it's looking like in today's market. There's a lot of other considerations, but along with that comes opportunities. So we're going to be talking about
Yeah.
all these kind of topics and more. So definitely want to stay on board. So I want to give John a chance to introduce himself, and then we'll start to have this conversation.
Super. Thank you, Amanda, for having me join you today. I know you've been putting some videos out there and helping people and giving them great information, getting them inspired about real estate and then how you can help them with lending to make that happen. And, like you said there in your intro, you've learned a lot from experiencing investing in real estate yourself and have multiple rentals. And I had the blessing of working with you. I think it's been a 5 times, I believe, somewhere in that neighborhood. About half of the homes that you own, we were able to help you with the financing. And with all the things going on in the economy and with the government and all types of different things and your own motivations and personal timing and stuff that was important to you, we started chatting earlier this year and said, hey, why don't you expand and offer people your same level of expertise and detail, attention to detail and organization, and blend your knowledge of investing in real estate and owning it and living in it with helping them find ways to finance it. So we decided to start working together, which is fantastic. So I'm really excited about this opportunity. Thank you for having me on today.
Yeah, I'm super excited too. I mean, every day since I started getting onboarded with Momentum Mortgage and talking to more and more people, just today I was talking with a woman after church. We went to brunch and she said, I'd love to have a house, but I can't afford the down payment. And
Mm,
so that's something
yeah,
we're seeing here today is lower down payments. And she was still thinking that you needed 20% down. When I said, depending on the situation, you could do 5%, 3%, possibly 1%.
mm,
And you can even ask for those sellers to help you with the closing costs. She says,
right.
no way. I'm paying $2,500 on rent. I'm like, you can in this market pay
You can find a
$2,500
home.
total.
Yeah,
And these
right.
are the kind of conversations I'm seeing
Wow.
every day.
That's the exciting part, I think, that you're getting to experience now. You were always the recipient of financial information and support. And now there's something that's hard to describe to people about the thrill and the joy and the excitement and the momentum that happens when you consistently are helping people, and hence one of the reasons for the name. We want to help people. Momentum is just such a key element in keeping things moving and keeping things going and growing and progressing and having that consistency and constancy of value. And so we named the company Momentum because we are about giving people that momentum, like you are, about getting started, but also even once you're in, how do I maintain that momentum? How do I continue to grow? How do I continue to see the value in real estate? And I think you were going to talk today with me about timing and, whether it's a good market timing, personal timing, financial timing, and then purpose and value and cost. And, how do we balance all this? Your example you just gave of, what am I spending? Can I get something? Could I actually have control over my destiny or at least influence for the same cost? Or is it going to cost me more or less? How should I compare owning versus renting? It's
Yeah,
pretty
I mean, it
exciting.
was so exciting because you can just see them light up. Because at first, many people who are listening to this might have already seen the light, but some people, for the first time when they hear it, they can't believe it. And they start to think, wow, like that could be me. Because in their
Yeah.
mind, they might have an understanding of what owning a home is like. And it's something that felt so out of reach, to be
Mm,
able to say, no, this is my home. I can invite whoever I want to in it. I can have pets. I can renovate. I can build equity. I can take out a HELOC years down the road if I need to. I can sell.
right.
And they know that
Yes.
this all exists, but then they feel like, no, but like I know homes in my area costs 400,000 and I need, at least 80,000 plus closing costs. I need 85,000 to do that. And then
Yeah.
you can say, no, you really don't need that much. And they,
Mm.
at first they say, really? They don't believe it. They don't believe it. So they need a little bit of time to digest. And
Yeah.
I know, remember when I first got like my first property, I did need 20% down because it was a cooperative. But when I ran into my neighbor who said, do you want to buy my place? I was one of those people who said, I am sure I cannot buy a place. You know, I've got student loans. I work a nonprofit job. And she told
I
me,
would
well,
never
it's,
qualify.
and she told me, well, it's $100,000. And even back then, I knew that that was affordable, even when I didn't know too much about real estate. And I said, let me check on that. Let me check on that. And that's
Mm.
really the biggest advice I have for most people is go get qualified, even if you're not thinking of buying. Do the steps because then
Go
you'll
through the
know what you can
process.
afford. Yeah, go through the
Yeah.
process, then you will know what you can afford. And you can take that knowledge back to yourself, back to the internet, check Redfin. Maybe you have a friend who's a realtor, and you can start to play homeowner and see if it works for you.
Those are great points. I think there's one piece that I don't want to lose sight of because it's what you and I represent, and you brought it out. It's also, it's not just mathematics. I think for a lot of people, it's who do I trust? How do
Mm.
I know if I'm getting a good deal? How do I know if I would qualify? Is this really good for me? And I'm not sure I have the right stuff, and I don't know what documents they need. I don't know if I have those documents. And, that the whole thing begins to the mystery and the lack of having a person they can trust and knows that they have their best interest at heart. Those two things keep people from owning property more than anything else. They do have these ideas that it's going to cost them more than it might. And it's not that you can't put it 20% down because you can, but if you put less, you can still, excuse me, obtain a home. And it's not just about the money, though. I think it really goes back to who can I trust? And that's one of the reasons we want to put this video out there is because it's hard to sit and call through the phone book and tell everybody I'm trustworthy. Instead, they
Awesome.
can come on YouTube or any type of channel where these videos might be posted and they can find and come to their own understanding. Am I going to feel dumb or are they going to be approachable? I don't want to go to someone who's stuffy and stuck up and throws out terminology I don't understand. I won't feel like I can ask any questions to get any answers. So I just won't mess with it. So the hope is that doing videos like this, people can actually see that you and I are humans, that we care, we're in this business for the goal of helping people. And obviously, everybody does occupational work so that they can get some financial return for that. But the return that you and I get, like I was speaking about each month, and at the end of each month, as we look back and reflect and go, hey, those people would have never gotten a house if it wasn't for me helping them. If they didn't take that first step, I wouldn't have been able to help them. So it's a tag team. It takes a village to put it together, but we got to start somewhere, and that's the purpose of these videos is really get the message out, create awareness, and share that we are people that you can trust and talk to. We do care. That's why we're in the industry, and we get a sense of accomplishment. Some of our biggest rewards, money comes and goes, and it's a medium of exchange, but memories and relationships and value of helping someone achieve their financial dreams regarding real estate, that never leaves, and it just keeps building. It's like a mountain. It's a house, it's a mountain, it's an M, it's all those things because everything that's wrapped into what we're talking about is what's in the logo. So, anyway,
But now that we've been talking for a little bit, some of the things that is on a lot of people's mind is home affordability right now. And I know that we can see this across so many markets in America that, since COVID, prices went skyrocketing high.
yes.
People, at that time, people really wanted to buy more property. They weren't doing a lot of things. So they were saving a lot of money, wanted to buy properties, wanted to move, let's say to Florida or someplace warm, and the interest rates at some point went from 3%, let's say, to 7% and got really expensive. But the prices of the houses still stayed high. And we're kind of living that right now. High priced home, much higher than, let's say, in 2019, and high interest rates, much higher than 2022 and before. Do you see in this affordability market, with all the different news articles, with all the different opinions that are going around, what have people been facing? Let me say people who are already owners and maybe people who want to become owners or investors today.
Yeah, it's a great question. And I tell you, I think there's been a lot of effort. I think between 2020 and 2022, not only did home values go up at 25% average per year, it seemed like at lots of parts of the country, maybe not the whole country, but certain parts were between 10, 15, up to 25% or more. The state you live in, Florida, had more than that at times. Well, the market where you're familiar with, the DC market in 2022, was the only part of the United States that declined. It declined 5%, and every other state level or went up. And we've been seeing a drift down nationwide since around summer of 22 into 23. And then 24 definitely had several pockets, several markets across the country that declined, with a few exceptions where pockets of markets went up still in 24. And then here we are in 25. You live in a state where, my gosh, values have plummeted already, begun to in certain sections of the state more than most other states, but that's partially because they also grew the fastest with really no sustainable facts. It was really during the COVID time frame and towards the end of that when people got a lot of PP loans and they ended up not having to pay them back. Self-employed people. You also had people tired of being bound with those 6 and 10 foot distances and stay at home and no more than 6 people in your house and can't go anywhere and wear a mask and all that kind of stuff that we went through. It's kind of strange now because we don't live that way. But ma'am, there for a couple of years, everybody was struggling with that. So a lot of people in the New England and Northeast area of the United States and other parts of the United States moved to Florida and took their cash with them. And a lot of them didn't even finance. Some did, but a higher percentage than normal even wrote checks. And that caused homes to not be appraised. People were coming from a more expensive market down to a Florida market, and that caused the prices to just escalate. I remember in late 2021, early 22, I was working with a client from Northern Virginia here, the DC market, the metro market, who moved to Florida. And this is the first time. And at that point, I had been in business around 17, 18 years in business. And that's the first time and thousands of loans that I couldn't get an appraiser to appraise a property. I
Why
literally,
not?
it took me 3 months. No, I
Because there was
called,
so many appraisals that they were doing?
no, the properties had escalated so fast. They just said, there's no way we can appraise it. Everybody's writing cash. No one in that whole
Oh,
city had
okay.
financed. So no one got an appraisal. So the prices were just whatever people wanted to pay. And the appraiser knew that there was no valid comps that he could use 6 months prior. And this had just been a surge. And literally, it took me 3 months of calling appraisers, and I finally begged a guy to do it so we could get a loan done. Because without an appraisal, there is no loan. The customer was kind of shocked. I was shocked. All the real estate professionals were shocked and never had run into that in my life. So it gave me a lot of learning lessons there, enhancements to what I already knew, and clarification. And one of those is, well, hey, values are actually truly, totally dependent upon what other people do, a comparable sale. But we can talk about that later. We were on the affordability part. What happened in that market and real estate is the prices escalate, like you said, they escalated. And between February and August of 22, the rates moved in 6 months, about 6 to 10 years worth of normal movement. That massive amount of rate change completely shocked the entire market. Most of the shocked the customers and shut down some lenders that were 50 and 100 years in business literally closed their doors because the rates went so fast they couldn't keep up with it. They were losing millions of dollars per month and they literally shut down. And so in that 20 to 22 timeframe, it was a massive amount of volume. And then in 22 to 23, when the rates went up, that whole year and a half between February and then about June of 23, tons of lenders went through a lot of change. Either they downsized, they streamlined, they eliminated, they shrunk personnel, they realigned the type of loans they were doing, or they went out of business. And that had a lot to do with whether they were properly aligned on how they locked in and securitized their loans. So the customer, though, back to today, where are we today? We went through this wild swing. And since about summer of 23, the prices of homes have been slowly drifting downward. And then they kind of leveled off a lot of 24, then fall of 24 went down some more. 25. Well, now the interesting thing I would say, real estate is always, I'm going to use a term, and if you need me to describe it, I'll try to do my best. I think real estate's always been pocketed. There are pockets of real estate where they respond according to very hyper locals, another term that Google and other online searches use, very hyper locally focused. Some cities are down to the block and the street. Some are the neighborhood. Some are a district. Some are a ward. Some are a half section. Some have their own names, like in Miami, of Miami Shores. It's right in Miami, but it's a separate area. That's one I've done some lending in. So they all have these different ways to identify themselves, and they could be large sectors, large cities, or small pockets and within cities. But all of them now vary greatly. If you go to Miami and that area, like I referenced, you're going to get an entirely different experience than in the north part of Florida or on the coast side of Florida, the Gulf Coast. Maybe I don't know if it's the Mexican Gulf or the American Gulf. I guess that's up for opinion. But so I don't want to touch that one. Everybody comes to their own conclusion there. So, but the reality is affordability prices are very hyper local, and you really need a local real estate professional to help guide you as to what's happening locally. It's too hard to make really broad brush statements other than I can say the majority of the United States, I think statistically, is experiencing a downturn in the prices of homes. It's becoming more and more affordable. What do you see in your market?
I think that the most important thing you said is to have a local expert get on your side and give you those tips, because what I don't want
Yeah.
people to do is think, oh, well, I'm not going to buy something now because the property values are going to go down, down, down.
Yeah.
Maybe, maybe not. That's where you need to look at where you want to buy. And is that the case or is that not the case? Because what we're
Mm-hmm.
seeing in my little pocket of Florida, which is not Tampa, which is not Sarasota or Miami, it's Brevard County,
Mm.
is we're seeing that, and again, it is hyper local. I live
Yeah.
on a little island called Cocoa Beach, a single family home here, 3 bedroom, 2 bath, 1,700 square foot is going to be like $700,000. Whereas 3 or 4 years ago, that was 450. So the prices have
Mm.
really gone up. They're not coming down yet.
Mm.
But if you stay in the same county and you go to a place called Melbourne, I'm
Mm-hmm.
seeing so many cute looking houses on Redfin. They look great. They're $300,000. Maybe a couple years ago, they were 200, 225. It's not too much of an appreciation. And it's still quite affordable for many people who live in the area to buy a house that's
Mm. Yeah.
$300,000 in really great shape.
Mm.
So for real, it's if people are wanting to get into the market now, wanting to buy a place for their families, I would
Right.
say check out a lot of things that you see in the neighborhoods you want to live. You can do that for a couple days or weeks. Some people love it and are addicted to it. But if
Yeah.
you really want to make that move, the next step for a lot of people is to talk to that real estate expert, someone that you can trust, like you said,
Yeah.
because you want someone who can talk to you and learn about what your goals are, what kind of living situation do you want, what's important to you, because everyone is different. I think some people
Yes.
on this channel know I used to be a realtor for 3 years in Washington, D.C. And what every person thinks is their dream home, they have it up here, and it's going to be different for everybody else. And so you as a customer need to find that realtor who can listen to you, hear your dreams, and then say, hey, based on what you've said, here are a few different kinds of options. Here's why I think they would work. And from the financing side,
Yes.
the key is that you can afford those kind of options and kind of bring that knowledge of the local market plus the knowledge of your finances and what that
There
looks
you
like in
go.
a budget together.
Yeah.
That's why it's so iterative. And we're talking about what is the first step. And so for me, some of the
Yep.
first step I see is, do you think owning could possibly, under the right circumstances, be a great benefit for you? And then you investigate, you learn a little bit more, and you say, I think it could work for me if these kind of things can happen. And
So I think you're right. And I think you're really trying to hone in on excellent points that people need to know. Like, where do I start and how do I begin? I've got a couple of tips I want to give then, just because I've been doing it a while and I kind of know exactly the rhythm of what you're saying, which is where do I start and how do I bring this together? What's the most important? What's first, second, and third? And I think what a lot of customers have learned over the last 5 years, statistically, it says they've learned it because there's been a big swing in where people start. For about 50 years, everybody started with the realtor or real estate agent. And now, the last 5 years, about 30 to 32% of the people have swung to starting and talking about the money part first, which is where our conversation started. Like this lady at lunch saying, "Hey, I don't think I have enough money. I can't afford it. I've been trying to save it. I don't think I'll ever get there. I have to have this much money." And that conversation allowed you, as a financial expert, then to say, "Hey, I hear you. I hear what you're saying. But if you'll work with me and talk with me, share with me a little bit more about you and where you are and where you want to be and what are your reasons and why would you consider owning? Why are you still renting?" Listening, I think, is the key element. You look for, when you're a shopper, or what you want to shop for first is the money part and then the real estate. And in both cases, one of the key elements of you knowing, do I have the right person? Are they a good listener? Are they helping to ask questions to help me understand myself? Because sometimes we go through life with just some general thoughts, but we don't really have. So the best thing is to gain understanding, seek help. Where do I start to seek help? I recommend that you start with the money part first, go through the pre qualification process. That actually needs to happen before you go see a realtor per se, because it's what you were, I think, what you were kind of juxtaposing there is we know how
Yeah.
important it is to talk to a realtor, and there's a lot of value there. But it's like, well, wait, unless I know what I can afford and what I can pay and what that money translates into and how that math and my paperwork and my credit and my job and my income and my job time and my job style, how all that comes together and make sure that I actually can do something with it. Until you do that, you're really just spinning wheels, window shopping with a realtor, even if you have a
Yeah.
great conversation, because you don't really know what you can do. So I think a lot of people are looking for that confidence and comfort that if I go through this, this, and this, great. Now I have a better understanding of how the money works, the math works, the qualifications work, and what my earning power will buy in dollars. If we start there, then there's a confidence, there's an understanding, especially if you speak to someone like you or I, where we're going to explain probably a little bit more than just, and throw out terms that they don't know. We're not going to throw out a term and expect that they know everything. We're actually going to be patient and walk them through the process and explain the terminology and answer their questions and ask them questions to stimulate their thinking. So when you're looking for a lender, I'd say is a loan officer really is a better term. If you're looking for a loan officer, there are three choices of where you can go: a banker, a broker, and a lender. Most people don't know that. So there's only three choices in the United States. You got to go one of those three. The banks have continued to shrink their impact with mortgages because they don't really have branches with personnel in them anymore. There's very few people. There's not that many mortgage trained, well trained, experienced loan officers sitting in a bank branch. All the banks chose to centralize over these last 5 to 10 years, really 10 years. Shrink back, have corporate offices, set appointments, try and meet me, and a lot of times the bank loan officers have not had the need or challenge yet to face all the different loan programs, all the different down payment assistant programs. They really don't, they pretty much stay in a lane of usually one or two or three products because that's what the bank that they worked with might specialize in. So if you're looking for someone who's a loan officer, who's trained, expertise, and has tools, I would say they're either going to be at a lender and a broker, not really the banks. Those are kind of a thing of the past. And most people know that as soon as I say it, they're going to go, "Oh, yeah, I don't really go to the bank for much anymore anyway." Even if you have a bank, most people do. How many times do you actually drive to the branch and walk in? Even if you drive to the branch, you're probably going to an ATM or through the drive through, or you're doing banking online. I think banking has really shrunk in people's minds as far as it being a great mortgage place. And then the difference between a lender and a broker is this simple: a lender represents typically their programs and their products, whatever their brand represents. They say, "You know what, this is what we do. Here's our prices, here's our programs, here's our people, and here's our brand name." There's nothing wrong with that. But for the most part, it's a singular offer. Could be a powerful offer, could be a great company, but it's singular. With brokers like you and I, where we work in the brokerage realm, we offer people our high level of expertise, training, time, and listening ear and answering the questions like we discussed. But we also have the other side, which is the horsepower of numerous lending sources out in the country that allow us to give our customers the best deal. We're not limited to one brand or one product set or one set of pricing. We're actually going to search and shop for our customers to get them the best deal. And that's what some brokerages offer. Now, whether the loan officer takes advantage of all that or not, that's a different story. So, but as far as finding out what's affordable and what do we do in the market, I think you first start with finding a trusted loan officer, having a mathematical and a money conversation. Once you feel like, okay, I think I got this, I know where I am, I know where I'm headed, I know whether I can move forward now, or it might take me a month or 6 months or a year to get ready. We're okay. Like you said, we're fine to talk to somebody, even if you don't know for sure that you can. If you just want to find out, let's have a conversation. Let's go through that pre qualification process. Once we have good news and you're ready to go, then the next step in this whole equation is I need to form a team. So the loan officer is not the only trusted advisor. We also need a real estate professional. You have a lot of real estate ownership experience, investment experience, and you've been a realtor. And then you also now have the lending capability. So you're quite a combo package here. You've got a lot of background, a lot of experience, a lot of desire and willingness to share that with people appropriately in their life. You first listen to their needs and then you bring expertise to that can help them. But then you need a real estate partner on the other end. Either that's going to be you in some cases, or if it's beyond your local market and you want to help somebody in another state or another part of the state where you can't drive to effectively, then you'll work with the lending partner they find. And I think the number one thing I've told people for years, I still stand on it, is besides finding a full time real estate agent, the other thing I would look for is someone who listens well. But how well do they listen? you
Mhm.
know, and you talked about that. So why is that important to you, Amanda? Why is it good to listen?
Oh man, it's good to listen because, buying a house is such a big deal for so many people. And they
Mhm.
have so many hopes and aspirations and maybe even fears or misconceptions. And they maybe have never talked to anybody. And even if they have, for this transaction, they might not have talked to somebody about what they're thinking. What do they want to do? And when you can hear these answers and you can hear these ideas, like they just run through our brains because as mortgage professionals or real estate professionals, we can take that and say, okay, let me learn a little bit more. And we can have all these ideas, but when you hear from clients, it's going to give you something completely different that if you're just trying to come up with something that works for them to close
Right.
that deal, it's not going to give them, their heart's desire. And so what we're looking for is to make this experience, to make the actual house that they get the best thing that can happen for them. And, from a financial side, from a mortgage professional side, we want you to know all about the costs upfront. We want you to know what they're going to be, that you're happy with. You have to pay money in this world so that you know what you're going to be getting for that
right.
money and that you
Right.
know the benefits that are coming with that and the
Right.
costs. And that not only you're not surprised, you're like, no, this is the right choice for me. So that when you're there 1 year later, 2 years later, you're like, hey, that was a great choice for me. And as my life
Right.
goes forward, I'm going to keep tabs on how I'm doing. Am I able to save money? When I open up my mortgage statement and I look at what the approximate valuation of my house is, can I see that my equity in this home is growing? When I want to think about getting a bigger place, can I see a path forward to doing that that
Hmm.
this first purchase helped me do? And so
Yep.
basically just giving people the power to take control of their lives. I mean, I've been talked to so many folks here in Central Florida who said, well, because I bought a house 5 years ago, my husband got laid off unexpectedly, and
Mm.
we didn't have to go through any problems because of that. We were able to take
Mm.
some equity and use it, for 2 or 3 or 4 months until he got that next job. And
Mm.
it just gives you owning the property can give you a chance to save that money or build that equity that renting alone might not be able to do.
Right.
So it just to think about all the possible benefits and hear what you're interested in, then we can tailor the conversation around getting you what you
There you
want.
go. Yep.
Mhm.
So if you get to the end right there that you just landed on, I think this is the key. See, a lot of people come to me over the last 10 years and say, do I really need a real estate professional? I've got all the tools, I've got all the information. I'm picking the houses, I'm telling them which ones I want to see. They're just picking maybe an order that we go in and they're unlocking a door, but I'm figuring all this out on my own. And so, real estate being a tangible, hard, physical asset that you can understand, learn about, and being so accessible now that you don't have to have an agent to find it because the MLS is all parked out there on several different sources and I can find houses. So, it leads people to think I don't really need a real estate professional. And so if we go back to my question about why is it so important that they listen, and it's because the key to this whole thing is even though it's a tangible, physical, relatable, accessible asset that is visible to me, I can see it all around me, I understand it, I can learn it, unlike a 401k or a bunch of stock plans or a 529, I can't. Most people can't understand all that stuff. Just too many documents to read and there's not sitting out in front of me. Where a house, I can see it, touch it, feel it, smell it, live in it, understand it. So we think we don't need the real estate professional, but this is where this is the difference. Is it actually is it's hiding in what you said. It is a personal, customized, emotional, intimate journey. Even though it's a physical asset to figure out where I want to live, what I want to buy, what it needs to look like, what it costs, and can I afford it? All of those key elements that go through. Now it's no longer just a home. This comes down to market timing, my affordability, what the market requires. Do I have the capital? Do I have the qualifications? And then I got to look at everything else like crime, schools, doctors, roadways, airports, access to mass travel, you know, mass transportation, and, getting around. And is there a traffic problem? Is there a smog problem? All of a sudden, this actually gets very personal because it's all the things that real estate touches. And that's why you need a real estate professional and you need one who's full time and active in the market that you're looking at, the general market, and maybe specific hyper markets. And then on top of that, they need to listen really well because, like you said, we can easily talk back to them about ideas. You and I can sit around and talk about real estate for hours and really never get tired of it because it's something we're interested in. But for us to just tell people a bunch of facts is not as powerful as helping them have their personal guide from where they are to where they want to be. And you referenced that really not just in the start, but then after you get started, where do you want to be next? What does your journey look like? You may not be able to answer every question, but at least we stimulate that idea like this is just your first purchase. You might have another one, even if you're 45 and it's your first purchase. You might have another one. What does this one do for you now? What will it do for you in the future? How does owning different than renting? And why should you do it? And what are you really going to get out of it? How did you make a wise decision then that'll help you make even a better move in the future? All those things you can't find online. You can't go on Zillow or Redfin and Realtor.com and get those answers. You need a human being who has the expertise, the training, the experience, and most of all, the passion and the care in their mind and in their heart for other people to realize we're not just chasing commissions. We'll probably make better ones if we actually just help people with what they really want by asking questions and helping them understand facts that pertain to what they care about. And as we do that, and you have a team of two people, a loan officer and a real estate professional who are both listening and working together and all working for your benefit as the customer, now you have a winning strategy. It's no longer websites and unlocking doors and just walking through. There's questions and care goes into which ones they're going to show you and they remind you of what you care about because it's just like going down a grocery aisle. You went in for 5 things, you come out with 50. How did that happen? Because you're getting all these influences on these end caps and these advertisements. I spent $200. I only needed to spend 40. The same thing happens with house shopping. You get so excited, you get caught up, you start looking at whatever they all have. You're comparing 5 or 6 or 7 or 10 homes a day when you're out looking. A real estate person is going to be like, hey, now remember this was more important to you and you said this. And now you can change your mind, but remember you said this and you were looking at that. And they kind of help you guide through this emotional, fun, exciting, but challenging and can be for some people a little bit emotional and traumatic on the journey of actually shopping and acquiring for a home. You kind of need that trusted ally with you. That's up to the family's choice. And then having a great loan officer who's the steady person there helping you understand affordability, market, cost, risk, style, working with your real estate agent to give them the letters and the information that they need so they can do contracts on your behalf. It really takes a team. And that's why I say start with the lender, start with a loan officer at a brokerage, and then go to a real estate professional who's full time. It may be a recommendation from you. You know realtors in that area, and you're
Definitely.
getting to know more.
Definitely. And I know that that's what happened to me. So for my second property, I didn't think it was a possibility. I had a friend of mine
Mm.
say, "Why don't you buy another place? You know, I own two homes and it's been a huge blessing for me. I've done this. I have this much equity. It's amazing." This is in 2016 in DC. And I said, "Yeah, that's really nice." I said, "You know, you're a lawyer. You know, I work at a nonprofit. I already own a place. I still have student loans." And he said to me, he's like, "You don't know. You don't know. I'm gonna talk to my lender." This was not John. This is before John, but it's okay.
Yep.
Shout out to Lola Pole in DC. And so I went and talked to her, and it was exactly that. She said, "No, let's sit down here. Bring me your documents. Let's see what we can do." And I'm like,
Mm.
"Sure, I'll send them in. I've got my W-2.
I'll try
Yeah,
it.
here's my credit report, you know." And so what we ended up settling on, just to let everybody know, I was making 50,000 or less, was a $400,000 FHA loan on a duplex. It was amazing. I got this place and I rented out the upstairs. So this is my first time as a landlord. And I lived in the downstairs, which had two bedrooms. So I got a roommate. And I was paying maybe $600 a month because my roommate and my upstairs neighbor were paying everything. And
Mm.
I was able to qualify for that because the lending professional knew what was important to me and knew that I didn't want to pay a lot of money, but that I wasn't afraid of being a landlord. I was running Airbnb out of one of my apartments for a while, was able to use
Mm.
that income to help me qualify, was able to say, "Look, you should do an FHA because you'll only need 3.5% down, and we can use the estimated income from the upstairs unit to help you qualify. So even
Mm.
though you don't make a lot of money, you can still qualify for this loan." And it was a
Hmm.
bigger loan, but it ended up being like the coolest purchase that I made because it got me into real estate as an
Hmm.
investor.
Right.
First through house hacking, which is when you kind of live in your house, but see it as an investment vehicle as well. But my whole
Hmm.
point of that story is she listened to me. She's really, really amazing. And her focus was on lower income people in DC, specifically with DC programs. So
I
she was
see.
awesome for me at that time. And then
Right.
as I kept on buying more properties, again, this is my journey,
Yes.
having, you know, being able to see more and more properties come in. I was looking for an investor friendly lender and came across John's company. He was working
Yep.
with his team and they helped me out to buy a couple of them because the more you get involved with real estate and with lending, you will know that the lender, the person you're talking to, is everything. So even if people are listening on this and they're like, "I don't want to own all these properties," that's fine. But you might want to consider owning one or two because of the wealth that that can really generate for you and your
And
family.
the tax savings, right? Yeah.
Tax saving.
What about timing? Is this a good time to buy? If someone says, you know what, this makes a lot of sense. I want to talk to somebody. You've motivated me to go talk to somebody, maybe even one of us on this video, and we get to know them and we have this conversation. Then the question that might be lingering in the back or front of people's minds is this
Yep.
the right time, the right timing? It's
Yeah.
typically a question that people might think of. Some of it's the right timing for them is the question that they have. And then some people consider market timing, which is what's going on beyond my needs, my personal timing, what's happening in the market. And is this a good time to buy? Do you think that people have that question?
I think people definitely have that question, but I also love the way you separated it from, is this my right time to buy as a person? And is this the right time in the market?
Yeah.
And I think that those can be two different questions. And of course, they both need to be yes in order for you to buy. And
Hopefully.
because once they talk to a real estate professional and learn about the benefits, personally, I think that for most people, the answer should be, and I can tell you why a little bit more.
Go
People have
ahead.
to put themselves, yes, it's my personal time in most cases. And that is determined by, can you qualify for a loan? And so that can be determined by, how's your credit score right now? How's your work history right now? And that work history can often be more flexible than people think as well. And so if you can get qualified, pretty much and there's not too much personal going in. Like a lot of times people might have a personal crisis. Maybe there's a death in the family.
Right.
Maybe they're
Right.
sending a child to college or something. If you're in between crises, you don't have a crisis right now, I would say that you should definitely be buying a property.
So that's the personal timing, right?
Personal
Hey,
timing.
I agree with you wholeheartedly. I think really the way some people have said it, I'm not coining this phrase, but they're like the best day to buy real estate was yesterday. The next best day is today. And if you can't do it today, then right after that is the very first day you can. In other words, if you look at it as an individual, when should I do it? As soon as you learn about it, you should do it and you should act on
Definitely.
it. It never gets cheaper. The longer you keep it, every day that goes by, your ownership experience becomes sweeter and sweeter. You end up finding potentially more and more value or more and more equity. You have lower and lower debt. You find that it was a really wise decision and you're so thankful. And then you're like, oh my gosh, I feel like a genius. It's like a process that you go through over a period of years. And so the longer you own real estate, I think the sweeter it becomes. If that's true holistically, then the reality is that everybody in the sound of our voice and in their thoughts and their life and their qualifications can get them there should do it, especially if we're talking about American real estate. Some countries might be a little different, but we're talking about buying real estate and owning it in America, the United States of America. So, from that standpoint, I think it's a fabulous idea. You and I've had conversations how a lot of people from other countries
Yeah.
and foreign nationals have figured out that they knew it was a great place. And as soon as they meet someone like you and I, they realize, oh, I can do it too, even if I don't live there. So then you think, well, if other people are figuring out and I live right here and I'm free to do it, why am I not doing it? Because everyone else is kind of clamor and beat down the door to get in here and own property at some nice place in the United States. Maybe I should too. So I agree with you that the answer personally is pretty much as soon as you can qualify, you think about it and you feel like you're connected to people that can make that happen for you, help your dream become a reality. And so that's what you and I do every day. That's the excitement we were talking about in the beginning. Market timing, I guess in one sense, I actually think that it is really just a matter of what actions do I take. I don't think there's a bad market to enter ever. I think it's just more what it comes down to is if you have a long term view, meaning I want to own this property. And if you go with my theory that every day that goes by, it's sweeter than sweeter, and you appreciate it more, and it appreciates more as part of that, then if you go in long term, then the short term of what's happening right now really doesn't matter. Well, what if I buy and the house value goes down? Right? That might be a question. Am I buying too high? If house values are going down, maybe I should wait. Okay. But here's the thing why that doesn't matter so much. If you have a long term view, whatever is happening right now, it's going to change. And whatever's going to happen over time is it's going to go up. And if you need any kind of proof, just look at any measuring stick that you can. Look at a 1 year, look at a 5 year, look at a 10 year, look at a 50 year, a 25 year, a 100 year pattern of real estate. I just talked to a gentleman yesterday who he's got an offer from his aunt to buy her house from her. He works for me. And she bought her house for $40,000 and it's now worth $1.2 million. She's obviously had it a long time. She's lived there her whole life. I know she's wanting to retire. So she wants to sell her house to him for 800. He said, "Should I do it?" I'm like,
Oh, yeah. Yesterday.
the answer is
Yesterday.
yes.
I mean, that's her giving you, how much was that? $400,000.
$400,000.
That's what she's
Exactly.
doing. And thank her
Exactly.
every day.
Yes. So the answer is you and I go, what? Yes, right? Don't talk longer. Fill out the application. Let's go get it, right? But
Yes.
but my point in that was that she bought it for 40 grand and it's now worth 1.2 million and it's not even in great shape. It's because of what it is and where it is, more where it is than what it is. And so the idea behind that is my point in using that particular story is to say the reality is it's always going to be higher. As long as you give us at least 3 years, maybe minimum of 3 to 5 years from any situation that's going on in the market, the value will be higher. So every day that you wait, you are blowing through profits that would happen while you sleep.
There's a way for people to check that that's true as well, which is looking back towards the 2008 housing crisis. Everything was on fire before that, and then it crashed. And it didn't stay down forever. It started to go back up. So
Right.
again, if we put the 5 years back on that, we're at what's 8 plus 5, 12 years, I think. 2012, things were healthy again. The
Yep.
other thing is people wonder if we are in the same situation, if we're going to see another 2008 happen right now.
Gotcha. Yeah.
And
Right.
is that something that home buyers should be concerned about? Could another
Well,
2008 happen? The prices are high.
yeah, none of us are prophets. None of us know the
Sure.
exact future. But what we can do, and past performance, as they say, is not indicative of future performance. I know they say that a lot of advisors are trained to say that. We don't actually have to say that because we're not really projecting values of homes anyway as loan officers, but we can discuss it. And if we are, I guess the easiest way to look at it is to say, well, let's look at the last 100 years, last 20, last 30, whatever you think you can look back to. Matter of fact, one of the things I like about Zillow.com is you can look back at least 10 years. So you can take a particular property you're looking at, and right on that property listing, you can move your little bar and it'll show you over the last 10 years what that house is worth every month. And so you can actually see how the progress of that property that you're looking at now for 450, like you said, or 300 in Melbourne, and you can look back and see what was it worth before. The guarantee is it was worth less before and it's worth more now, which shows that the history of property, whether it's particular to a home, a neighborhood, a market, a district, a ward, a city, or a state, you can look at anywhere in the United States. If you look over a 5 to 10 year period, you're going to see appreciation, even if it's not a lot. But you also won't see is that the debt is going down during that same time frame. So you're creating more and more equity because you started here with very little down payment. Your balance is going down and the value is going up faster. So you end up with this nice pile of extra money in there, even if the value didn't skyrocket and it just slowly grew, your balance is slowly growing down as well. And you end up creating this space, which is what you termed equity, and you could access it, like you said, in the future. If something negative happens, something positive, a schooling need, a retirement need, another house purchase, private education for your children, buying a boat, buying an addition to your home, upgrading your home, whatever you needed, that equity can be used 5 years later in your life, 10 years later in your life. It can really be a game changer. And it happened all while you're sleeping. No uniform, no punching the clock, no lunch pail. While you're sleeping, everybody else around you keeps selling and buying houses, and that makes your house just keep going up. So really, there's never a bad time.
Yeah, and I really mean that right now. So I have one question on here that I think
Yeah,
could be a good time to do it, which is
sure.
if,
Let's
if
do
you're
it.
listening to this and you had $10,000 saved up, what could you do to start to take advantage of the real estate market with just $10,000?
Right. Well, I'd say, if you are in an income bracket in your county that would allow you the 3% down, that might allow you to get into an actual property. If you feel like that's not quite the size you want, then you've got a lot of momentum build up towards maybe the 20 that you need if you're going to buy. So it really depends on where you want to get started and whether you can get some help or not. Because if you've saved up 10,000, you have good credit, you have your bills in line, you have a job, and you've been on the job for 6 months or longer, and you're making a decent wage, then you might find a relative, a very, very long-standing friend, or even a distant relative who could help you with the additional monies you might need. You also might find grants or down payment assistance programs that Amanda and her area could find you, or wherever you're located. There are various programs, both federal, state, and sometimes even little cities that run different programs. So if you say, hey, I've worked hard, I've been renting, I saved up 10,000, that might be with the combination of seller assistance, realtor assistance, loan officer assistance, and grant assistance, you could probably piece together even buying, a small condo. If you say, well, I really want a row home or a townhome, well, then you might need to save up 20 or 25. And then you combine that with all these other assistants that I mentioned, and we can help to cover your closing costs. They help with your down payment. I'd say you're well on your way to making a transition into home ownership. You just want to be really wise. If you go the condo route, you really need to look sensitive to who you're going to rent to. My typical advice is to look for a 2-2, a 2 bedroom, 2 bath. Main reason for that, if you're looking for a condo, is that you can always do like you did in your FHA example, Amanda, is rent out the other side. even if it's someone of the opposite sex or the same gender, you both have your own bathrooms. You don't need to invade each other's lives. You can literally rent out half of your place. That'll help make the difference up in the mortgage versus what you're paying in rent. Probably even reduce your mortgage portion that you pay to be below your rent that you're paying now.
Oh, yeah.
So save up 10 or 20 grand, buy at least a 2 bed, 2 bath condo if you can. And
Yeah.
then that way, when you turn around to rent it, you can also rent it to two separate roommates. You're not restricted to just one family, or it could be a young couple and they want an office, or a young couple who's having a child and they feel like, oh, I got room in the second bedroom. You have a lot more options of who you can rent to if you buy a 2-2, and you can afford it better. Now, in certain markets, I know like you chose for an investment property, it was a little different. You find out what rental incomes and what kind of people are renting. Who do you want to rent to? I would say at least a 2 bedroom, 2 bath if you can make that happen. That's better than a 2-1. It's more common to find a two
Definitely.
bed, 1 bath, and it's worth the 30 or 40 or 50 grand more that it takes to get a 2-2 sometimes. Sometimes it's only 10 grand more. But whatever, I would spend that little difference and get a 2-2 if you could. And that would be a great way to get started. Start to influence your destiny of where you're headed. When you're renting, you're funding someone else's investment plan. If you're owning, you're starting your own and you're managing your own plan.
Yeah, definitely. I know one stat that keeps blowing me out of the water is from like the US Census Bureau, which is the average net worth of a renter
Mm.
versus the average net worth of a homeowner. And
Uh-huh.
I think it's around 40 times bigger. So that net worth number
Wow.
is around
Wow.
$8 or $9,000 for a renter. And these are all renters, no matter what age you are.
Same.
Median is eight
Uh-huh.
or $9,000. That's all the
That's all
money.
they have of
That's
value
all they
beyond
have.
their paychecks and their.
And then for the homeowner, it's $400,000, and that's median.
That's
And
amazing.
so if you're thinking like, oh, I don't know, I mean, whatever, I'll just keep renting. You can, but you could also say, why not? I start today to be a part of that other side. You'll be surprised how quickly your money will grow. And the cool thing
Yep.
about real estate is that, and I think one reason why it really does grow is because we're all psychological human beings. And a lot of times when we have money, we have things we want to spend it on. We want to spend it on a birthday party for our kids. We want to spend it on a present for our mom. We want to spend it on a vacation because we only live once. And that is true. Or we spend
Hello.
it on tithing to the church or just anything.
Yep.
But when you have real estate and it's like your first home or maybe your second property, you just have to pay that mortgage. And the home is going to keep serving you, but you have to pay that mortgage no matter what. And so you will
Yep.
not be spending that money. Your money is really building up every month, and it's not so easy to touch it, which is fantastic because when you really, really need it, let's say in the full scope of your life, you have so many options for what you could do at retirement. And this will be fantastic for you. I mean, you
Right.
can see it in the boomers right now. They're like, oh, we decided to like downsize and now we like go on cruises all the time. Or, oh no, we live in our house and we really enjoy it. Or we decided to do a reverse mortgage. So if people who are homeowners who are boomers, you can see it in the relaxed way that they live.
Yes.
And some people who
If they own real estate. If they
exactly, that's what I
don't,
was
they're
gonna
not so
say. I was gonna
relaxed.
say, can own real estate? And if they were the
Yeah.
unlucky ones, and I don't want to touch on the sadness, but you can see articles that are profiling people who were not able to make that decision throughout their life. And they might be working until they're 80, until they're literally unable to work at whatever job will have them.
That's right.
And it's very sad. Their
Yeah.
children are having a tough time, of course, going forward because it's so hard. It might be hard for them to provide extra money to their parents. So for me, I think always of everybody's whole entire life arc, and real estate can really be an
You're
amazing
talking about
way.
a difference maker, is what you're saying. Real estate's a difference maker,
Yeah,
and it really
difference maker.
is. It's
Mhm.
been fantastic. It's been great for you, and I'm really glad we had this conversation. Do you have any other questions you think in that line that would be fitting, like of someone trying to make a purchase decision?
Oh, yeah. I had another question right here, which is, do you think that there's any person who right now, if they find themselves in a certain situation, they should maybe wait to buy a home? And people could identify themselves just to check that box.
I
Mhm.
guess the main one would be the only ones I would say is if you planned on buying and then selling, within 3 years. That would be different because, again, you need the long term focus. And if you're trying to get in and out and you're looking at it solely on investment purposes, I think the market's a little too uncertain right now for someone to take a 3 year, a 2 or 3 year run. I'm going to move to another country, or I'm going on a job, I'm going to be deployed, or I'm going to be sent around the world. And I just don't want to mess with long distance renting, although you and I would talk to them and try to help them figure out to keep it as a rental. But if they just said, no, no, I'm going to sell it, I'm not going to mess with it, then I would say just no reason to buy at that point, at least here.
Makes a lot of
You
sense. And
know,
I'm seeing that. I'm a member of the Central Florida Real Estate Investment Group here. They're amazing.
okay,
So if you're in Central Florida and you're interested in
great.
real estate, join us. But I would say I'm seeing a lot of that with flippers. Flippers who are in our group, they are slowing down. They're finishing the projects that they started. They're being really, really picky about finding additional projects because they know that prices are still high, but things might not be moving so fast right now. Because if you're buying and selling right away, you're both the buyer and the seller, and you have to think about that. Whereas right
Yes,
now, this could actually be a really great market for a buyer.
I
Uh,
totally agree.
one of the favorite things that I've heard from investment folks is you got to do what other people aren't doing at this moment. So if everybody's
Yeah.
rushing to buy, like what was happening when the prices were going up
Hmm.
and up and up, you're going to pay that really, really high price. You're going to have to fight for it.
Yes.
You're going to not appraise your property and pay in
Yes.
cash. And that's cool. But right now, at least nationwide, there are 500,000 fewer buyers than sellers. So you can look around and you can maybe ask for a lower price, or ask for the sellers to help with closing costs. And
Yep.
you can have your pick of the homes that you want. You can visit 5 homes and you're like, I actually like that one the most. And you will probably get it if you put your offer in, depending on what
Right.
market you're at. But here in Florida, you will probably get the house if you put your offer in, instead
Right.
of what we're experiencing 2 years ago, where people
Yeah.
were putting offers in and just not getting them because each home would get 20 offers. That's
Yep.
kind of shifted there.
It's about timing. And I think the market's too volatile on value in certain pockets, most of the
Mhm.
country right now. There's some places that it's still going up. Others, I'd say mostly it's stabilizing, kind of drifting, uncertain, or floating down. And so that's a little bit more volatile. It's not extremely volatile yet, but it's one where you're like, oh, if I'm going to buy and then try and get out in 6 months or 2 years, I don't know if the math would work on that. It probably wouldn't in some markets. If you're looking to hold a property, then I'd say it's fine. It doesn't matter because, again, in 2 to 3 years, everything shifts. And then in 5 years, for sure, you'll be back at and above where you are now. It
I
took a
love
little
that
longer.
because, again,
Yeah.
I don't believe we are at where we are in 2008, because in 2008,
No,
everybody
we're
was
not.
getting loans. We're passing them out like free tickets. And now it's been a very disciplined process to qualify
Yes,
ever
that's
since
been.
2008. And because of that,
Mhm.
it's not going to be a huge bubble pop. So for sure, even if your local market is going down, trending down like a percentage or two for the next 2 or 3 years, maybe worst case scenario. Well, who knows? We're not looking at 2008.
Mhm.
When you can remind me, it really made me feel great to hear that and to actually know that in 5 years, 100%, well, we can never say 100%, but you are
Yeah.
pretty
Mhm.
certain that this is going to be great
Back
opportunity.
going up. Yep, exactly. I mean, we
And when
probably
it's
will
going back
experience a
up, it's going
dip,
to be
but
hard to get in too.
it'll be
Um,
harder. You got to
it's
get
going to
in
be much
now.
harder to get in
Yep.
when it's
Yep.
going back up and everyone says, oh, look at that. Like things were fine. Now I want to buy a house. Now we've got 10 offers on that house and you have to
Yep.
settle
That
for
goes
the
to what you were
one.
saying with the investors. It's the what I call the contrarian view. If the herd is going this way, I always look the other direction and say, what opportunities are available? Don't always go with what the bulk of the people are doing. Try to act in the opposite direction and see how that looks. Usually there's a silver lining in a dark cloud or even a bright light that people are missing and they're running in fear when the reality is they should be running towards an opportunity. I feel like we're headed into some opportunities of great times to buy. And some people say to me, but yeah, but if the rate's 6.75, shouldn't I wait till it's 5.5? That's the same as waiting for the price to drop. The reality is, here's the beautiful thing on rates is which is different than purchase price. Purchase price, if I paid 400 and it goes to 300, I'm like, oh no, what did I do? Right? There's more fear about that. Although we've already hopefully given people assurance that if you wait at least 5 years, it's going to be back to where it was or higher. So you just got to wait through, you got to have a longer view. And that's how you overcome market timing on purchase price is just hold it longer. With an interest rate, it's a little different. You can actually realize it right when it happens. So if you started at 6.75 and the rates go to 5.5, you call Amanda or John up and you say, I need to redo my loan. You don't have to redo the property. You already bought it. You just redo the loan and we give you the savings. It's actually really, really easy. We're done in 2 to 3 weeks. And your next payment is now at the lower rate and lower payment threshold than the one you had the month before. So we can literally transform your life in a period of 3 weeks in most cases, sometimes two. Just focus on buying real estate at the soonest point you can and hold it for as long as you can, never planning to sell it. And even if you don't want to live in it, you can always move from it and somebody else will want to move in it. They don't make too many more houses. They don't make enough houses. We talk about new construction. They don't make enough new houses to keep up with the new demand. So the number of people who want to own is greater than the number of houses available, whether new or pre-existing. And so that creates a supply and demand, and that's partly what pushes the prices up. So the reality is get in as soon as you can, hold it for as long as you can, preferably never sell it, give it to your kids or your grandkids. And just like this aunt who's 65 trying to give it to her 23-year-old nephew, of course, to 800,000 to him is like, ugh, I can't do the payment. It's like, oh my gosh, that's terribly high. Yeah, but you can't walk away from 400 grand being handed to you either, right? So
Yeah, you
I'm
need to
helping.
take that house, make the loan happen.
So the reality is there's always options. You can rent, sell, you can have multiple different types of rent. You mentioned one earlier in the call that we were talking about, which is doing a midterm rental or a short-term rental. Midterm is like to someone who's going to be like an airline flight attendant who's coming in and out of the area and wants to live in this particular market. So it's close to the airport, but doesn't want to own. I know a lot of people do that. And you could be the landlord that owns the property, rents to them on a shorter term, midterm kind of basis, say maybe it's 3 months, 6 months, or a nurse or a medical professional who's there usually about 113 days at a time. They want to you can charge them more money. They get a great value. They don't have to keep going in and out of hotels or in and out of Airbnbs. They can literally stay for a little longer. You don't have to rent it as much. You don't need a maid. So that's a midterm rental, but it pays about 2.5 to 3 times what a long-term rental would pay. And then if you do
Wow.
short-term rentals, like you said, it's about 4.5 to 5%, where you're renting nightly or weekly or weekends. You can make them almost 5 times the income on that rental. So even if you buy and then eventually you turn it into something else, there's options. There's all these options with real estate. You're not just locked into one plan, but the simple truths are get it as soon as you can and hold it as long as you can. We can give you answers, directions, and financing related to whatever you want to do and instructions about how to do that when you're ready for change. But the constancy of holding it and improving in value, and eventually as it becomes a rental, it becomes a tax write-off. So there's additional benefits that happen later in life. So my recommendation is let's do it. Let's do it now. The other change I wanted to mention earlier, I think it might be appropriate now for those people who are not at the top end of credit. There's a couple of things that happened over the last 2 years that the Fannie Mae and Freddie Mac did to make it better. They actually took away most of the interest rate increases and costs for having lesser credit. And they passed that over to the people with good credit, and the people with less than favorable credit actually get a break. They also, during 2020 through 2022, hardly any first time buyers could get any houses because it was like you said, it was where everybody wanted to do it. So people writing checks, big down payment checks. If you're putting 1% down, 0% down, or 3% down, you got beat every day. I had some people pre-qualified for 19 months. They could never get a home because everybody would just beat them and the realtors would throw their offer in the trash. And so the reality is now you can buy right now, like you said, make an offer. You have a good chance at winning. We can go down to 620 on credit and get most anybody into a home, some type of home. We can help you get there. So the average credit score in America is 662. If you're below that, we can still do the loan. If you're right at it, we can do a loan. We can help you get into a home. If you have higher credit, well, then you can still get in also and you just get, slightly more programs. But really, we can even go down to 580 if we had to. So really, we have a spectrum of 580 to 850. Anywhere in between there, you probably have a chance. As long as you can come up with some money down and you can involve relatives. And then you can even have someone be a co-signer who's not even going to live in the property. It's called a non-occupying co-borrower. They're not going to live there. Even if you're a younger person or not even not that young, maybe you're 35, because there's a lot of people in their 30s who've never owned a property. That's okay. We can get you one now. You say, I don't really want a co-signer. Well, don't think of it that way. Just think of it as a non-buying co-borrower who's joining it to help you qualify. Great
So a
question.
lot of people have, like, depending on where they've worked, they've set aside either some of their money into a 401k, or sometimes their company actually puts 2, 3, or 4% has some matching, and you
That's right.
can actually use that for down payments as well. And so people might not be aware of it. I know I wasn't, and that was one of my first mistakes that I will never let a client make. I emptied my retirement fund,
Mhm.
paid all the penalties, all the taxes, so that I had enough for my 20% down payment for my co-op. You don't have to empty your retirement fund.
Mhm.
You take a loan out against it,
Right.
and I don't know
That's
the
right.
details of how that works, 'cause I haven't done it yet. I did a trade-off program because my loan officer,
Didn't
because I
tell
had to
you.
look for someone who would loan to a cooperative, and there weren't
Co-op.
many,
Yeah, it's
and
very
I only
narrow.
it
Hmm.
was very narrow, didn't coach me on that.
Didn't tell you.
Nope.
Yeah.
Mhm.
So yeah, you can use what the government calls qualified retirement accounts, which is an assortment of IRAs, 401ks, a Roth IRA, self directed IRAs. You can use all of them differently, but and the 401k is probably the first place, or TSP, thrift savings plan, or, 459 plans, what 405, what is it, 405B? I can't think of what the teachers have in the school system. They all have different numbers. They're just tax codes, is what they are, but they're all considered qualified accounts. It is very possible to withdraw or take a loan, either one, a distribution or a loan against your retirement accounts. I would start with the one that's employer sponsored, where you're putting money in. Even if they're not putting money in, you're just putting the money into a program that the employer gave you. That's an employer sponsored plan. If you're actively employed there, you can take up to 50% of the money in there as a loan. I get it. You know what? When you're not at, high earning and you're hardworking, sometimes you can't save super quick. But if you were smart and you followed the instructions and you put some money away for retirement, I feel perfectly fine to talk about people allocating that towards a home. And you can actually call them up and get 50% of whatever's in there, and they'll give it to you in a loan, and then you can repay it out of your paycheck if you'd like. If you happen to leave that employer, then they will count the whole balance against you as a taxable income, but that's still pretty small as far as how much tax it would cost. So the reality is, the reason I'm okay with talking about people using retirement accounts for buying a home, some people might at first kind of bristle and say, well, wait, that's spending my retirement for something now. The reason that's incorrect is because you're not spending it. All you're
Not
doing
spending.
is
Okay.
reallocating what it's invested in. It moves from being invested in a stock or a mutual fund inside a fund that you can't see, you don't understand, you really don't know how it's working. And you might have ideas, you might have made some choices, but you really don't understand all the mechanics inside it. And you can't do anything to make it go up or down. You're just kind of like blind faith hoping. Whereas you can take that money that's in that scenario, have it withdrawn and reinvested into a property. You're not really spending. Oh, it's going for a down payment. That's spending. No, because that down payment is equity it's investment into a home. If you're investing in a home instead of investing into a stock of a company, you really
Yeah.
just move the money from one investment to another. You didn't really spend it. So just if you look at it that way, you realize, oh, I didn't really rob from Peter to pay Paul. I just moved from qualified plan to real estate plan. And why would you do that? Well, real estate's going to give you a more immediate, larger return right away. Year one and every year after that, your money's going to grow way faster. And if you ever turned it into a rental, well, then you'd get three reasons why. You'd have the appreciation that's greater than a stock held account. You'd have cash flow income that you can't get. Then if you get profit from cash flow, you can keep that money as a rental. And then the third thing is you get a tax write-off. You only get tax deferral if you're taking, most qualified plans are on deferral basis. A Roth is not, but others are. So if you're deferring on there, instead of a deferral, when you own a real estate rental property, you just get to count that tax deduction now. It's not deferred, it's just reduced your tax burden off all your income. So you want to own a bunch like Amanda, so you can have large write-offs. The idea there is it's a much better investment. It's kind of like going from a really crappy penny stock to a really good stock. It's moving from stocks of companies that you can't control to a property that you can influence what happens. That's really all you're doing.
I love this where you really just reminded people that it's not, I can't afford to spend on this house. It's, I'm investing. And this can be some of the first time that some people have actually thought about it from an investment lens. Because a lot of
Yes.
times people will use investment as a patina to get you to buy some product. But
Yes.
this is really something that helps people get ahead. I checked the stats
Yes.
of all the millionaires in America, over 90% have a rental property. So in addition to the home they own, they have a rental property or investments in properties. So this is something that people are doing, whether they are,
100%.
no matter what income you are, but even the really rich people are serious about real estate and have that as part of their investment portfolio. Mhm.
Absolutely. Yep. And after 21 years of being in the business, I can say the excitement that comes from helping people, the opportunity to walk people through the process and see them learn the light bulbs come off their eye in their mind. They learn, they apply, they make it personal, they start down the journey, they're excited. And almost all of them have looked back and thanked me for giving them that head start, helping them get going. And some of them have done it by repeating two, three, four, five. And one gentleman's done 11 loans with me and has 10 properties. And so it's just everybody's done it to a different way. But one of the ways I get excitement and thrill is by helping people grow and build tremendous wealth. And real estate's one of the best vehicles. Like you said, every wealthy person who either became wealthy or is wealthy has real estate
I
as a
mean,
sizable part of their portfolio.
I love it because you don't even need that much money to get started
Right.
at all.
And
You
when's the best
just
time?
yesterday, 20 years
Yes,
ago,
yesterday, today, or tomorrow.
as soon as you can, is the
Yes,
best time.
absolutely.
And then the next
And
best,
what's the
well, then
first
once you got
step?
one,
Where do you start? Who do you go to first?
lender or a loan
Yeah,
officer,
the
the
loan
money
officer.
people, the people who are going to connect you with the funds because they're going to tell you what is possible today. If it's not
And
possible today, what you need to do to make it
to
possible.
get there. We help people with credit repair and credit enhancement and credit surgery. We help people with savings plans. We help people with which tools, like we were just talking about, which tools do I already have that I didn't know I could use for a mortgage? That might be a retirement plan. We help you figure out how to get it done. We ask you questions, we listen well, and we give you the facts and the base, the strong foundation of knowledge, confidence, and awareness. That's what we give you as a loan officer. And then your realtor can give you market knowledge, customize that journey to a property, and help you see your wants, your desires, your dreams in a real physical thing that you can reach out and touch, walk through, smell, experience, look at, photograph, show others. It's much more exciting and engaging than, hey, I got this stock and this particular company. Oh, good for you. Let's go get a cocktail. Everybody's excited about real estate and everybody wants to get in it somehow, but most people are confused how to do it and how to get there. We can help you in any scenario. Give us a call. We'll help you get started and solid and understood and comfortable and confident. And then we'd like to partner with a local real estate professional that you choose. We might be able to help you ourselves. And if you'd like to go with someone else, we'll work with them.
Definitely. So I think that we've covered so many questions today, so many
Absolutely.
stories. I hope that the people here really got something that really stuck with them. The thing that really stuck with
Yeah.
me is this is possible for everybody, no matter where you are. There definitely is a way that real estate can improve your life. Let's learn about what that is for you. And even if you're
Yes.
already a homeowner, this might be a time to think about what your next step is. Could you improve your life by perhaps
Amen.
renting out the place you own and getting something else,
Yes.
or checking
Absolutely.
out your first investment property? And this is something that
Absolutely.
John and I both know a lot about. So when
Yeah.
you get your first house, it doesn't have to be over. You can continue to grow as you grow.
100%. Yep. Yep, that's great. We love to help people build an empire of wealth. So it's our pleasure to do so. We hope that people will contact us because that's what we love doing every day. That's why we do it.
Definitely. I mean, it gives us the biggest joy in the world to be able to share that knowledge with them specifically and to have them make that change for their lives. I mean, we've seen so many clients together. We've seen so many
Yeah.
stories, and we hope that you guys will become a client and will have your own success story. Would love to help you build that.
Absolutely. Great to talk with you today.
Oh, yeah, this was really fun. And we hope you guys have fun too. And definitely check our YouTube channels and our Instagrams. I'm going to put that in the descriptions and you can definitely subscribe and follow. But the most important thing is if you haven't done it yet, reach out and give us a call. We've got our website, mymomentummortgage.com. That's where you'll find all the necessary contact information you need. Anything else from you, John?
That's it. Thank you, Amanda, for having me on today. Great to talk with you and hope that a lot of people will take advantage of this opportunity. We look forward to helping.
All right, see you guys. Till next time.